Welcome to the 10-year market forecast for brokerage firm VantageFX, an Australian-regulated CFD provider. VantageFX was founded in 2009 by a highly specialized team with backgrounds in fintech and forex trading, created to help clients pursue their financial goals. We proudly offer transparent access to the forex market, powerful trading platforms, MetaTrader 4 and MetaTrader 5, exceptional execution speed, and award-winning customer service. The business operates worldwide, with offices in Australia, UK, Taiwan, and Malaysia, and we employ over 500 staff. Over the last 10 years, the retail CFD sector has boomed globally. Financial assets such as foreign exchange, commodities, and equities are the main assets that most investors to look trade, as they provide the most volatility and opportunity of fundamental understanding. At VantageFX, we provide forex, commodities, indices, and share CFDs and cryptocurrencies. In the last 3 years, there has been significant change in the retail CFD sector, with international law changing with CFD providers, mainly in UK and Europe. ESMA, the European Securities and Market Authority, changed the law on average offering to retail investors from 500 to 1 down to 30 to 1. This was helped to VantageFX as the leading broker in Australia to explore European market. Here we can see the non-price determinants of demand curve for VantageFX. On the y-axis, we have the price or spread per trade for executing a trade with VantageFX. On the x-axis, we have the quantity of trades that retail investors are willing and able to execute. The curve is downward sloping as the law of demand states. The quantity of demanded will decrease as the price increases. However, non-price determinant D1 move to D2 is a financial announcement. For example, RBA interest rate announcement and other financial activities increase market volatility. The trading opportunity boomed the demand of trades regardless of the spread for the product. On the other hand, let's now have a look at the supply curve for VantageFX. The law of supply states there's always a positive relationship between price and the quantity supplied. Therefore, as price increases, the amount of tradable assets and access to the markets Vantage and its liquidity providers are willing to provide also increase. The non-price determinants decided supply curve S1 moved to S2 is a threat from its competitors. The sufficient supply determined the excellent execution speed and avoid slippage on large trading volume. VantageFX and its liquidity provider must make sure the supply is always over the demand to provide traders good trading environment. There are variable costs the trader must be aware when executing trades. Liquidity provider or supplier can increase spread at the times of high level of trades. This in return impacts the retail traders or demanders. For example, the trader have access to economy calendars, which lists all the important economic announcements for the day of trade. If the client executing a trade on the AUD-USD currency pair during the time of RBA interest rate decision, an hour or two before the announcement, the supplier may decide to increase the spread due to high level of demand. This change in spread, although seen to have a negative impact on the retail trader, needs to be occurred by the supplier due to increased demand and increased risk. When the cost of placing trades goes higher and the overnight swap fee increase, clients will reduce trading volume or consider switching to other brokers and liquidity providers. Therefore, we can see demand curve moved from D1 to D2. VantageFX provides pro ECN account to charge professional clients incredible low commission and provide a low spread to keep high net worth clients. To combat the risk of supply, Vantage uses 14 reputable liquidity providers. We do this in order to continue to offer supply to our large retail trader client base. Due to the diversity of supply, we are likely to see a steady, if not increasing supply to trading sector. The strategy lowered the liquidity efficiency risk and gained more power to negotiate a better unit price of products with our liquidity provider. When assessing VantageFX overall position, we can see it's likely to be positive news. The price and the non-price determinants of demand indicate the demand curve overall will increase and shift to the right, while the price and the non-price determinants supply also increase. In the next 10 years, it's likely the price offering to retail traders will increase, as well as the supply tradable assets. In the next 10 years, the risk is about the remuneration and leverage change. In line with recent Royal Commission, ASICs are looking into the Conflict Remuneration Act to determine how and why brokers are able to be remunerated in a customer-centric manner. If it occurs, the business is at the risk of losing Australian local clients to overseas brokers who are not under ASIC regulated. Also, the Australian safety market is at the risk aligned with international regulation such as ESMA and FCA related to the downgrade of leverage. If leverage does decrease, it could cause a decrease in demand for Vantage services in Australia. However, the real opportunity is that the compliance become really strict on the global scale. Vantage is well positioned to take advantage of the new opportunity to expand the international trading markets. VantageFX gained UK FCA and the Cayman Islands CMA license to serve overseas clients. It has worked hard to create and sustain a strong reputation in the industry and grow the business fast.